let's start this. All right. So you guys have the 5 links in front of you within Options Chat as well. That is basically the watch list for the 5 sessions or last 5 sessions we're going to cover. Um, I'm going to do it on the S&P 500 because that's what I mostly trade. You can use this system on anything with high liquidity. I've said this many times. And we're going to color code everything before we even start our day, before we do anything, so we can figure out what the hell is going on, what are the probabilities of something happening, so on and so forth. This system works really well when there is news, when there isn't news. The only time, and with my back testing, I've seen the system not work is when there is a black swan kind of situation. Every single time besides that, I've been able to back test and understand, explain, and figure out why the session behaved the way it did, why certain zones had certain things happen, so on and so forth. Um, we're going to start with Monday, November 28th, 2002, and we're going to discuss the trading week from November 28th all the way till December 2nd, so you guys understand what the hell's going on. So I'm going to, again, start with this 8 a.m. zone. I talk about this all the time. You can also highlight these 4 a.m. prints as well, as they do have some form of importance, but we're going to keep it super simple. And we're going to keep it color coordinated so you guys understand how everything works, how everything is behaving. So the top zone we're going to mark in green. So let me change this color. We're also going to mark this upper zone in green. We're going to mark the body of the candles. So you see these 2 candles right here. Um, we're going to mark them in red. They're basically the same range. It's like a 2 cent difference. So I'm just going to mark the bottom one. We both can see those candles clearly. And then I will mark the bottom in red as well. So before I even continue, how I'm going to explain these ranges are the upper zones are bullish. The upper green zone is your bullish supply. So the market is extremely strong if you get over that on the week-to-week basis and or throughout the intraday trading session. The bodies of the candle, we're going to use those as momentum zones, hence this consolidation and chop here. And we can also mark the bottom of this print as well. Excuse me for not doing that. And then this is basically like a loss of short-term momentum. And then the bottom zone is like we need this session to close above this to have some form of strength throughout the rest of the day. But I start every morning with the S&P 500 doing this. It's how the watch lists behave. And let me pull it up for the video as well, just so people can understand what is going on. Display capture. So you should be able to see. Yeah, there you go. I know the video will be able to see this. The chat can't. You guys can still see my stream. But we stated with the first link that I provided, with a slightly aggressive gap down on Chinese protests, SPY is currently dancing at a 400 Psyche number. This week we have a lot of news and volatility. We had non-farm payrolls. We had a JPOW speech. We had a bunch of things going on last week. For SPY on the intraday session, you have a bullish breakout over 399.7 with confirmation over 400.6 and then continuation at 4140 if we get there. If you continue, you have 4250, so on and so forth. Below, you're looking for a bearish breakdown for 399.16 and 398.46, and then we're looking for 397.80, 396.50, 395.20, or 394.30s. So continuing with that, let's pull this back up. So throughout the session, you can already see how the morning behaved. We had a pop through this zone in the morning. You're still above your bullish pivots, so the market is supporting that relative strength at the start of the day. Hello, a bit late. Don't worry, you missed nothing. So already we have to ask ourselves before the day started, why did we bounce at 921? We don't know that unless we do certain measurements, and that's where I'm going to apply a Fibonacci retracement. I use my charts on log scale. You do not need to use them on log scale for this system. However, it provides a little bit more accuracy in my opinion. So at the start of the day, we get a retracement and we hold this zone at the bottom, and I'm going to mark it with an arrow. This is a 0.786 fib, you can see right here. So already going into the day, the session is weak. We can identify this with our volume. Notice how this buyer print here is less than your overall selling prints. So there are more sellers participating within this session at the start of the day. However, we still get a pop. Now, when I discuss something being a DCB or a dead cat bounce, and it bounces from a 0.786 within the morning, it's basically showing that regardless of price going this far, and it did test this upper zone, it's limited with the move it can do. It has an implied range that is basically stating we cannot go a certain distance without doing something else. So we're going to delete that. We're going to take a trend-based fib extension and we're going to measure to the upside. How I'm doing this is I'm grabbing the bottom of the print, the top of the print, and then the bottom of that 0.76 bounce, and you can see it very clearly in this trendline tool. When we do reapply this measurement, I want to identify two things before I continue. So already we can see in the very opening candle discuss how the behavior at the 786 zone had an issue. There's a problem with the market's continued strength, and in a funny synchronistic viewpoint, you can also notice the top, the area we marked beforehand before we did any fib, is that momentum spot for the session to be strong. So we can see it continue to break through that, and if I turn on my volume, when we then tap this momentum spot, specifically on this 933 tick, even though it is a green candle following and we do continue higher, notice that your volume on this tick down here is it's gone. There's no continued buyers, and it's a sudden rejection and drop at the 935 and 936 tick. Whenever you have a 786 bounce, your targets on the reversal, provided it holds, are a 382. Obviously, it pushes through that. Your zero point 0.7 and your 0.618. Notice that's basically the same thing, just reversed, right? So you get to that 786 zone, it has trouble, but it breaks it immediately. From there, you're looking for your 127s and 1618s and your 1414. Now, when I get into this upper cluster, especially this 1414, I want to discuss that extension, when you do put in that kind of bounce, is overall weaker, and that is behaving as a heavier supply. Hence how when we look at this tick following at 944 and 945, it struggles to break that zone because you needed a healthier base in the market to be able to support it. Um, the other thing I want to note is notice how regardless, it doesn't matter if the session was a single or double top, whatever. It's a single top, supply is forced to respect something to see if it wants to continue. Now it also gives us a little bit of an edge with this session because we have this 400 psyche level, and your continuation basically being above 400. So if we never broke 400 within that moment, obviously we can tell based on things measuring it to the upside from that bounce, we have an issue. So that bounce happens. We then retrace back down into your former continuation. Now note this is again that same 8 a.m. upper wick. So you can see how that momentum, once it taps it, you see how that volume node right here shifts things down at 955, and some buyers at 1002 and 1004 try supporting that price. However, they fail to with this rejection up here. Now you have a last dip buyer, because if we go back to the original measurement, so let me delete this again and let's go back to how the day started, right? You have buyers attempting at a short-term higher low before we continue. Now, what's important about this is this attempts to be a higher low off of the former momentum spot, or basically something like a sweet spot or a golden zone within that start of the day. But again, the issue is we already know, based on what we've discussed, this bounce in the morning was a problem. So of course they can attempt it to be a higher low, and we can go back to our previous measurement and discuss, well, okay, this bounce was a 618 here. Some volume came in. They tried to support it. Our original bounce was bad, and they had it behaving as a higher low short term, but there's still not enough to support it because it's not a good base. And obviously, we can also notice when it was a 618 bounce at the low, it then it supported a move up to a 618 zone, and we can even mark this as well so we can have even more bias. Let me delete the fib. The opposite, so let's mark the top of this body, right, as another momentum zone, and we're going to mark this in green. And what body I'm taking is your 801 8 a.m. print, and notice exactly how it behaves within that zone. So buyers failed to break it because the base was bad, and we had a continued drop throughout this session. This is, I think, when I think it was Fed Evans. I might be wrong, but it was some Fed speaker started discussing things around this period. But now there's two things we can do with this before we can. Also, before we continue, do you have any questions, by the way? Just so we could see what we've all or discuss what we've all seen so far. The base. What about the base? We're basically saying that this base, we're saying it's bad because of the number it's bouncing from. So I have a general rule set that I have pinned, and I'm going to copy and paste it for everyone in chat. So what the theory we're discussing is Elliott wave. This is something that I do on an intraday time frame, and then I also do it on a daily time frame. Um, but discussing why that base is bad, it's just like a rule of numbers. So holding a 236 or a 7.8 is bad. A point 0.5 is okay. I like to go over this further whenever, absolutely. And it's a complicated thing if you're newer to it, which is why I said it's open discussion this time. I want to be able to have you guys understand it as best as I can, so you guys can understand what you guys are looking at then on. Um, but your 382, your 618 is good. Your 236 and your 786 as a base is bad. And then remember, we're going to think about it from the opposite, right? So if we're measuring it up, a 382 or a 618, if you break over those is strong, a 236 or a 786 can count as momentum because before it would be considered a dead cat or a base. So flipping the way you measure it, um, so on and so forth. The pull is basically too deep. Mm-hmm. So the base that it makes is bad. It's a problematic number to bounce off of. And so the algorithm, even though it does run, the algorithm recognizes that and it goes, okay, this is a fixed range that we can then behave in moving forward. How could it have played out to go higher from a 930-ish range? So yeah, this is a good example. And you will see examples like that throughout the other five that we cover. This one is a little more complicated, which is why I wanted to start with this one. Um, but let's say hypothetically how it could have worked, right? Let's use this example. Notice that these buyers here in the morning at 398.90 is a 618 originally. It's a good bounce. But what's the issue when we measure it again to the upside? And I'm glad you asked this question. So if I just take that same rule and I measure it up, notice how you have somewhat of a struggle as you get to that 618 flip, so an equal move. And a point 0.5 is basically similar to a 2.3 or a 7.8. It's an okay bounce. It's better momentum than the other two we've discussed, but it basically stalls at a momentum period when we remeasure it up. So that's really it. Um, so in that hypothetical situation, if it was stronger, you would have seen a break of 399.80, and this pop in the morning would have happened a lot sooner than the pop later on. And also, this is a example of how they set people up for failure sometimes, because even though you look at the session with our rule set, the pop would have occurred pre-market. Yes, that's correct. Or at least some of the pop. Likely, we would have seen uh, a test of. Oops, I went back too far. We likely would have seen a. That's annoying. Why isn't it popping up? A test of likely, because knowing that's a 618, right? That's a good bounce. At one point, it was a strong bounce. 399.60 to 80s. That's your momentum spot, anyways. And then if it broke that, you would have been at like 400.4 before the session even started. Um, So sometimes we are late to the moves because the people that are trading ES, right? Your futures market is already trading before we get to the day. So we have to see the range that they've given us to behave in when your US market opens. Um, and even if we don't do the fib stuff, right, we also know that we have this upper zone up here that we can identify as, all right, I need my daily session above this to be able to behave well, um, and have a continued move possibly. But I'm glad you asked that question. And like I said, what is a dead cat bounce? Both of those. Every single one you named, so 236 or 786 is a dead cat bounce. Um, it's very unlikely you will see things in the morning bounce at your first number because it's such a sudden zone. And even before we even continue, right? What does it imply for the trade? That the momentum is weak. It's showing that the relative strength isn't strong, and it needs to either reject a zone and make a better base and come back to where it originally bounced, or go lower after the bounce, and then so on and so forth. But we can also see, even before we continue, notice how your tick at 805, you have people bouncing off at 382. So we already are stating that a holding of the zone is strong. So if we remeasure it really quickly, again, your 382, it struggles right at a 236. So when we flip it, we have a golden zone bounce, which is cool, but your momentum rejects, struggles, and so we don't support it. And sometimes these moments are quick, so you need to be able to be patient and understand the setups that you're taking. But it's also important to know the momentum you are fighting and or joining, so you can understand the overall breadth of the trade and the risk reward that's implied within the trade. If you're taking those early morning bounces, like we've discussed previously, you're running at risk of early supply zones when we then flip it and measure it back up. So a 786, a 618, a 1272, a 1414, so on and so forth, um, showing struggles when you do take those bounces. So that's why I discuss things about best risk reward, so on and so forth. Um, I'm glad we're spending like 15 minutes on this though, just so when we go to the tool you're using, which points are you clicking? So I'm taking the base of the candle and I start with a fib retracement. So in this example, I'll delete the old one and we'll just move it to a random spot. So if I'm measuring things to the downside, I'll take the low and the high of the candle. Some people do the opposite. To me, that makes no sense because when we're doing something like a fib retracement, we're measuring the retracement that the move is making. So what is happening from that point next. And then once it's made a retracement, so once it's made a base, we're then going to take the bottom of the move, the top of the move, and then the base it makes to then measure further price action within the future. And we'll identify examples of that as we move forward. Um, but a Fibonacci retracement and extension is what I'm using. Um, Now, I want to quickly recap again. So we saw the dead cat bounce in the morning, still had a quote unquote strong squeeze. We remeasure it upside, 1618 rejection, so it's a heavy supply tap that fails to break, right? Now there's two ways I can do this moving forward because obviously the session then loses this range. I can either A, measure it to the downside from the base it makes at 922 onwards, aka take the 922 low, take that high rejection at 935, and then see what happens from then on. And or B, I can take our former 8 a.m. range because again, the markets are behaving in a fixed risk profile. So understanding that the upper zone of the session failed to break, you are basically stating, all right, that's our top for the day until that is then broken based on what 8 a.m. post said. However, we also understand that it created a larger breadth, meaning that if we were then to lose a specific zone, the move that can have or the move that can then happen afterwards may be heavier based on where your entry at or where your entry is at versus let's say like all right, you went long here, obviously the drop from then on is is bad, right? But you don't lose as much money for so let's say you went long up here. Um, so I'm going to use the original 8 a.m. downside measurement, and then I'm going to do the readjusted measurement so we can identify what then happened. Okay. So we're going to start with the original one. So we measure it, the candle, right? So we're going to ignore this price action just for this example, and then we're going to do the remeasurement with a proper high a day to show what happened. So I want to identify something really clearly. So understanding this, right? We know it was a 786 bounce here. It failed its momentum and a reversal here. Yet look how long it consolidates, right? You have news incoming. You have algorithms behaving in a certain way. You have the former 618 bounce up here at 820s failing in your 11 o'clock zone. And then notice how it gets smacked right off momentum after this big candle. And even regardless, this base is accurately tested and reversed from because we start getting to a good demand zone. Now, if people were paying attention in chat, do you guys remember what this base or this rejection was up here? That was a 1618. So notice how when I turn my volume tool on, where's your most recent set of buyers within this range? Well, it's your 1618. So algorithms basically stated from that point on, all right, we've made an equal move. We're now going to see if the buyers can support this move, and your retracement back to the upside happened within less than 1 minute or 2 minutes. So sometimes it is that quick, depending on how fixated your range is. And so I'm going to do two things really quickly. I'm going to show when I remeasure it to the upside again, what happens if I just ignore this price action. And then B, I'm also going to show you what happens when I also include this price action. So we're going to delete this. We're going to measure to the upside. We're going to take the low of that candle. We're going to take the high of this candle, and we're going to take the low of that trade. So notice how, again, it was a 1618 bounce very quickly within 2 minutes. It pushes through your 1272, taps your 1414, and taps your 8 a.m. momentum here, and it all struggles within the same candle. So it's again the same premise, except you're lower in the session. So that was basically your sign going, hey, bears just took over here. This is the attempt at a short-term retracement, and they fail. Now, let me also make this clear and show what the proper remeasurement would look like following that base. So notice how obviously it doesn't tap that same zone on this measurement, right? Notice how this was a former 1618 rejection at high a day. And when we do this new remeasurement, look how fast your bearish move gets once you lose it when we remeasure it to the downside. So it's important to understand the ranges you're behaving in, and I observed both of the measurements we then discussed, aka the original 8 a.m. zones, along with the breadth that was then expanded to then identify what rules are being implied, how it's behaving, so on and so forth. Any questions from this point, by the way? Any questions? I know we just talked about it a good bit. What's a full cycle? Explain that. Okay. So in your write-up, or in the write-up that I stated, uh, I say a 40236, a 4272, or a 4618 as a completed full cycle. What I mean by that is from this point on, we can expect some form of a retracement, aka the market flushed, it failed, or it completed its move, and from now you're testing some form of a dead cat and or continued bounce depending on where buyers take it, um, to then see if we're going to flush more or if we're going to reverse some of the move. It's basically the algorithm's fixed range for the day. Now, what I want to make clear is in bear markets, your ranges can be expanded depending on individual ticker strength. So if we're observing something like the S&P 500, we also should probably observe Dow Jones, NASDAQ, and Apple. So let's say SPY makes a full cycle. We can then discuss that a lot of the market is bearish. But if tech hasn't made its base, we might have to wait for tech to make its base as well to then support the S&P 500's bounce. So it still might bleed. Um, and throughout the day, if it hits 236, can we assume it will be a downtrend as shown as in the example? Um, that is wording that is a little hard. Uh, are you asking from the perspective of the downside or the upside? As in, if we measure to the downside, it should almost automatically hit that measurement that you're discussing. Um, but if you're measuring it to the upside, hypothetically, that's going to be your very first target. That's even seeing if the bounce wants to be supported or not. And if it's going to put in another like 40, 60, 80 cents. Um, if you're measuring it to the downside, then expect that area to not hold. Most buyers won't show up there. But in this particular case, it's because of the bounce we made in the morning, which is why that then remeasurement fails to hold at like 10 o'clock ish, like right up here at 9:50s. Um, so I'm gonna show two examples again, and we're gonna go through five of them, by the way. So not just this session, we're gonna discuss a lot of them. But I'm gonna take this measurement again. So we understand again it was a 1618. That 1618 is lost. This base is lost. Your downtrend then continues. So there's two measurements I'm going to show again, like I stated, but we already understand just from this measurement again alone in the morning that when we don't really need to readjust, we can. Um, as soon as this zone is lost, you can then see how we get to your next buyer zone. Now, a 272 and a 2618, as we continue within these zones, is a good demand zone to hold. It is. You notice how this buyer tries to participate at this 2618, but it barely lifted off the ground. So buyers weren't in control, then moving on. And we also know this because we want to basically think of this as a deviation, right? And I discuss, and I find it ironic that he just joined. Welcome, Snack Grip, but um, we want to think of these as a deviation, right? So a 0.236, and I'm going to write it up again. A 0.382, 0.382, a 0.5, a 0.618, and a 0.786. We're going to consider this one deviation. We're going to consider this two deviations, or sorry, one half of a full move. We're going to consider this 3x or close to a full deviation. And then we're going to consider the last one, so 4236, 4.272 slash 4.618. We're going to consider that a full cycle has then been completed. And I also want to identify this and make it clear, right? If we know that, and this is what I want to highlight about this system, which is why a lot of people get confused about the accuracy of it, right? So if we know that this flush down here in the morning, let me put a date and price range on it. So from here on, this was an hour and 20 minutes, and this was 1/4 of a full deviation. This pump from then on is 1/2 of a deviation, right? We identified that. So your 0.786 held 1/4, the reversal 1/2. When we then remeasure it again, and that retracement to the 786 took about an hour and 22 minutes. Let's see how long it takes to get back to it and or reverse off of it. Basically an hour and 22 minutes, and then it fails. And secondly, when we can identify that, all right, well, your retracement originally, after you make this extension, right, this was 1/4. This same zone is about 1/4. However, we then know once the 786 is lost, you then do 2/3, right? It basically pumped, or I'm sorry, not 2/3, 1/2. We know that because, again, that 1618 rejection at the top. So then when we reapply it, after it loses this 1/4 deviation, and we understand this zone made two pushes, notice how moving then forward, it does another 1/2 down, meaning it gets to this 1618. These buyers don't care because this algorithm already knows and understands we need to get to this base to be able to properly perform. Um, and even if I apply that remeasurement, so the same thing when I do this to the downside, right? We can clearly see we made 1/4 down, failed. This 618 fails, right? Those buyers can't break that supply. And then again, when you are finishing about 1/2, we know those buyers don't want it here because it's already done a quarter and then a half move here. And so taking it from this point, we can then see it again flush another full 1/2 deviation down. So it basically is a fixed range from these zones you are then um, pumping to and rejecting from to then show you what your likelihood is for these bounces to hold. And note, it is important depending on what retraces you make for then what targets you're looking for and what targets you reject to then see what targets are going to behave. And you can understand how one zone may be a scalp zone versus one zone may be a holding zone. Now, I'm also going to delete this stuff and I'm just going to show one example really quickly. So you can plot these levels on your chart if you want. It's up to you guys. This is from an analyst that I like to study from. Their name is Wifey Alpha on Twitter. You can learn a lot from them if you are newer to this kind of stuff. I marked all those zones in purple for you guys in the chart, so whenever I'm sharing my information, you guys don't have to get confused what these zones are. Let me go back to that session as well. Apologies. So when I mark those zones, we have this bounce here with the purple. I highlighted them in purple so you guys could see what they are. And notice how the purple then shows a short-term amount of buyers here, and then we trade off of this level the next day for a moment of time. I've noticed that those levels that I just shared with you guys are important, and I highly suggest copying and pasting them. And I will show you guys at the end of the day my daily chart if you want to copy everything if you want. Um, and then things I have in yellow are considered dark pool prints. What's the app again you're using? This is TradingView. TradingView. Um, I talked about dark pool prints in yellow, and I've recently started applying those to my charts as well. If you're wondering how I got this 395.20, let me zoom out for you and I will show you. So over here on Thursday, November 17th, you can very clearly see you get a sudden uptick at 8:49 in the morning. I like to call these cheater prints or dark pool prints, whatever you want to discuss. Sometimes these hit in the morning or throughout the session. Sometimes they take a moment. But I generally mark them as a multi-week support and resistance level because they have a specific behavior in terms of market structure. So I've been identifying those and observing them when they happen. Um, so I'm going to move on from this example, and I'm then going to show you guys another example, and we're going to go through 5, and then we're going to discuss things of charting, things like that, so you can understand again what I'm doing. Um, so we're on Tuesday, November 29th, and this is going to be this link. So let me copy and paste that for you guys. So that's the second that's the second watch list I put out this week. Again, I put this information out every morning, so you don't even have to do the work. You guys can just pop in there yourself and understand what's going on. And let me turn this on for the video real quick. Give me 1 second. Display capture trading, and then put that there. All right. So for people who want to follow along, this is an options watch list in the link I sent in options chat. So this is day 2. We are opening above. I put about, my bad. Above our support and resistance swap at 396.50 mentioned yesterday, the zone marked in purple. For a bullish breakout, you want to break at 397.50 with confirmation over 398.15. Above, you have your 400 Psyche number and our previously mentioned 2.272 at 401.40. That is my specific measurements. Everyone's going to have different ones depending on how they measure it. Below, if you want a bearish breakdown, look for a loss of 396.65. Losing 395.20 or the dark pool print we mentioned yesterday would send you to 394.25. Okay. So we're going to do the same thing again, just how we did before. So you guys can see I'm reapplying the same rules every single day. So upper zone. And again, we're not stating that. Let me make this clear too. When it comes to these upper wicks that you see here, it doesn't mean that you're going to tap it throughout the session whatsoever. However, they are tapped on multi-week to multi-month time frames. And within an example, we have some all the way up at 465 right now, and we have some all the way down at your upper 200s to really understand how the market is identifying the ranges we're behaving in. But I'm going to mark that in. I'm going to mark that in green. Or I'm going to mark this in green as well. What is implied by the dark pool print? I got you. Hold on. We're going to mark that in green. We're also going to mark the upper wick of this print in green. We're going to mark this one in red. Basically, it's a 4 cent difference, so I don't really care. So we're just going to mark the bottom one. In red, we're going to mark the loss of this zone in red. And what is implied by the dark pool print, it is basically stating that there is an algorithm that is behaving at this level. It should highlight importance at this level. Um, it doesn't mean that there's going to be buyers showing immediately one day off of it. There may be, there may not be, but depending on how big your move is, it's a zone to just identify within importance. So again, we're going to do the same thing. We're going to take a bearish retracement, so we're going to measure the bottom and the top of it, and we're going to measure things to the downside. Okay? So with the S&P 500 in particular, this is a important session that we can discuss, right? Because we already understand that this session over here was having a problem with buyers until you got to our dark pool print and this point. And we also get a double bottom and technically 3 higher lows, 1, 2, and 3 off of this zone. So very simply, we can notice that it bounces off a 2618. You had buyers show up, fail, make a new low in the morning, retest that 8 a.m. zone at 9:34. It fails. You have a DCB here, it doesn't really hold. You flush to a better demand, and buyers show up. And I see Nancy typing. What's up? Like I said, I wanted to walk through you guys. Are you doing bearish or bullish fib based on the color of the candle? No. Every morning, 8 a.m., I'm always measuring to the downside. Does not matter. You have some small move to the downside every morning at 8 a.m. Even if it's like 2 ticks, and we will see examples in that. Um, we'll see. You'll see. Um, so I want to make this very clear again. There's 2 things I could do from this point on, right? We make a base, and I can remeasure to the upside, or I can leave this chart on. Now I want to leave this chart on first because I want to showcase up here. Notice how claiming the reverse of the move. So when we still keep this bearish measurement on, the former positivity, I guess we could say, or positive zones, your 382 and your 236, for it to hold the strong zone, became weak. You get an upper wick rejection and then a big move down all of a sudden, right? But there's also another way I can share this, where we understand this bounce from here as a 2618, so it's finished 1/2 of a cycle. When we remeasure this back to the upside from that base, notice how very clearly it does the same half deviation back up. So it's a 2618 at the lows, it's a 272 when we measure it back up. So that 1/2 move from the downside was then mathematically finished to the upside. It's not saying it can't go any farther, because it can. It's just going to be very unlikely unless, in this example, we see how they try and make a retracement here to then support buyers. Notice how if it were to break this 396.60 and the hypothetical, we would have ran to 398 and or 397.67. But in this case, buyers failed, so it was a quick drop. And how do I know that's the dark pool print? Again, let me show this very clearly. From this candle over here, we can very, very, very clearly see this is an unusual tick on November 17th. So I'm just identifying what the price is. That's it. This candle shows up for me. I'm identifying it as sus, and it's just a sus candle basically. I also will discuss these as dark pool prints. They show up at 4 p.m. to 8 p.m. So sometimes I identify these, but if I just see a big one like this, I just focus on the more important one. Um, but going back to this session that we were discussing, I think. Did I scroll past it? No, I didn't. Okay. So again, 2618 at the lows. We remeasure it up. 272 to the upside. So basically, again, your 1/2 zone fails. Now, again, there's two ways I can identify this moving forward. I can either A, remeasure and take my low and take my high of this trend, but this doesn't really give me the most accurate base, right? Like we flushed through the zone. What possibly could give me the more reaccurate measurement? And this is why I'm saying sometimes you don't even need to delete your bearish measurements from the start of the day. So we can take this and notice, oops, we can take that and notice very clearly when I discuss something like a full cycle being completed, notice the base that they make off of it, right? And as well, notice how within the rules we are implying, right? If we're considering a 272 or a 2618 1/2 of a full cycle, and then it pumps all the way back to your fixed range at the start of the day to then have a bullish breakout. So it does 1/2 to the upside, basically neglecting everything that previously flushed. From then on, isn't it very interesting how this then rejects and it completes something like a full cycle within one move because you had a 1/2 and your 1/2. So both sides struggled. They gave it to bears because buyers didn't want it. So um, from then on, we can see how the rest of the session traded, right? We can very clearly see the market doesn't go any lower beyond this point. So we can then delete this fully, and this is something I like to identify, measuring it to the upside. Grab the low of your 8 a.m. candle, grab the high of your 8 a.m. candle, grab your low of day. And again, this is what I was saying to Bike. And there's something important that happened on this session too, which is why we can then see the behavior into the next session, and I'll share that shortly. Um, but notice how the session basically traded within halves, right? So we had a half move down, half move up, full move down, and again, notice how your buyers failed at this halfway point up here, right? So you then put in and this is now from a bullish example. I want to make that clear. We are now implying this is bullish from this base moving forward. Um, I know I talk about how sometimes we snipe entries, right? And how do we know where to properly take an entry? There's two reasons. Well, one, we can bottom tick it, aka be long at the full cycle, AFK hold forever, or B, we can wait for a retracement. Well, how do we wait for a retracement? Well, if we know that the session is trading within halves, we identify the half extension up, so you could play partials to the upside up there, and then look to go full size if a zone holds. Now, how do we know a zone is holding? Well, if the session is trading in halves, we want to see it retrace to something like a momentum spot about halfway through uh, the moves. So again, if we're considering a 236 to a 786, 1/4 of a deviation, this zone to be another fourth, and then this zone to be another fourth, and then so on and so forth. Um, that was a lot of fours. But you basically right here backtest your momentum spot and it holds, which allows your then continued push up into your next supply zone when we remeasure to the upside. Now, and an example I would like to share, because Bike highlighted something like that earlier. Let's say this was really strong, right? What would have happened is a push here, a push back down if it was really strong, and you would have then broken up to this. Now, if it's weaker, obviously this didn't bounce at a good number and it just continued, so this then rejected. So what then behaved is something like one, oops, that's the wrong thing. Something like 1, 2, 3, this happened. You retrace back to this impulse right here, and then you push through the supply. Buyers didn't have enough consistency at this point, and then you basically stall out your move from then on. What's important about us identifying that is because let's say this then wanted to continue for the rest of the day, we would have seen something where it went up like this and then held here. This zone would have held. Why do we know that? Because this is your former supply. Since it didn't hold and the buyers did not support it, it then continued flushing back down into your higher low, but we don't even want that anymore. Why do we know we don't want it? And that's because this is already where buyers tried to show up to begin with. Why do we want buyers participating in the same range? It doesn't really make any sense unless, and this is where the kicker of this session um, starts, and I want to identify this clearly with what happens, but this is Tuesday, November 29th, and we're going to then transfer this data over to NASDAQ. So let's look over NASDAQ for a second on November 29th. And sometimes when the session moves too fast, and I was talking to this about KP, when the session moves too fast, you leave intraday gaps. I'm going to delete this. And it's very, 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 very slick and hard to tell. And this is literally only 1 penny. So you might not think this is a big deal, right? However, this is basically algorithm showing, hey, we knew, we know going into the Wednesday the next day that the session's going to be tight. Why? We have the Jerome Powell speech the next day. So let's mess around with the players a little bit, right? So looking at this, we could see QQQ never regains any strength. It doesn't break the zone unlike the S&P 500 did. We looked at the S&P 500 and it broke higher. It almost filled its full dump. And this is when I told the server, hey, a lot of this bearish move the next day or today will be reversed. And this is when SnackRep had shorts, and we told them to close because that gap was there and buyers, and we knew that that full cycle had happened already. So notice how the next day, even looking at this, buyers don't stop until your 8:15 and 8:30 news that came out that morning, and they fill that gap, and then the session finally behaves weaker. Um, so going back to SPY, we can then see from that session on November 29th, obviously SPY continued to push, right? It was stronger than NASDAQ. Didn't fill its full flush, but it almost did. And so the next day, the S&P 500, when NASDAQ broke out, which is up here, it went higher than its flush move. Um, so just so you guys could see why that session going forward on the 30th behaved the way it did. Um, any questions so far, by the way? Because this session is then going to get a little bit more complicated. So any questions overall, though, moving forward? And then we're going to go over these last 3 examples, and then moving forward, we're going to talk about basics of charting. And I know it's a lot. I hope you recorded it. I did record it. And we're recording now. So say hello to the recording. So this is the session where Jerome Powell ripped my shorts. This is the session where Jerome Powell was speaking, talking about future of interest rate hikes, things like that, how the general economy is doing. Now, I'm going to do something in particular for this session when we're studying the measurements for this, just because of the way this printed. I wouldn't normally do this, however, because of how this session then traded, I'm going to ignore it. But 8 o'clock zones right here. Again, we're going to do the same rules. We're going to mark this in red. We can mark this in purple and in green if we really want. So we're going to mark that in green. And we don't really need to mark this tick right here where the momentum would be because it's like 7 cents. It doesn't really matter. So in the morning, we notice that, wait a second, this doesn't really make a retracement, right? It doesn't. This defies the rules that we have stated. However, I'm going to share something really quickly. This is why I chose to ignore this. We can see that this zone holds is basically neutral. You have your news come out at 8:15 and 8:30. This was GDP. I forgot what this was. I think this was like, nah, I can't remember what that is off the top of my head. But basically, it's like a 786 holding. So you can remeasure it up. And it basically has a fixated range. Again, we know that a 786 bounce can only go towards a 786, a 127, a 1618, If it's exacerbated, it's going to go to a 2-7 or a 2-4, but that's the farthest that bounce could ever go. If it does ever go farther, then it's our measurement that we have, it's wrong. There's something wrong, or there's something that we're missing. AKA, like Dow Jones might be stronger, the breath might be more exacerbated because of what the session is going to then be implying throughout that day, um, so on and so forth. So, in this example, though, I'm going to share it two ways, but one, we have a 272 rejection at high a day if we're going to include that 815 tick. If not, you have a flat measurement at the start of the day. So let's apply a 272. Well, that seems pretty clear to me. A 272 retracement. So we measure to the downside. You have buyers show up at a 1618. So you attempt a higher low, which is half of a half basically. So we measure it up, 1, 2, 3. So already we're implying, right? This is what I wanted to say to you. Sometimes they already know algorithm wise what's going to happen based on what's already happened in the morning to then find your proper base, to then long at the exact tick, so on and so forth. But moving forward here, you had a half move up, a 1/2 down, or 1/4 down. Remeasuring it, you fail your momentum. So the session's weak, right? We know those buyers aren't supporting the move. Remeasuring it back to the downside, because we know the top tick is a 272. We can then see buyers step up here, but this is why I want to say keeping those dark pool prints marked are important. Notice how the buyers keep it pinned, or the sellers keep it pinned. They fail it. So finally, you come back down. We don't want to take the same base because it makes a new low a day. It makes a higher low, but this doesn't matter, right? We don't want to take something that just did that. You finally get to 2618 and it continues flushing. Or B, I could leave this and I could do something like that and notice how it bottom ticks, but why does this go lower? And this is something I want to share. You also need to keep track of your other indexes. It's important. So we noticed SPY finished a full cycle, but let's head over to NASDAQ, right? The leader of the market. What's really going on? Well, you have a dead cat bounce on NASDAQ right in the morning start. So we can measure that to the upside. 1, 2, 3. 786 struggles at a 786. SPY taps its supply zone up here. NASDAQ then breaks down. Um, so we can then reapply that measurement again back to the downside, and we can see how buyers tried here. They failed. It went lower. Or if we keep our original 8 a.m. measurement, we can notice, all right, NASDAQ at 1222 finally bases. And if we're going back to SPY on that session, even though it already finished a full cycle, which is what I was saying earlier, notice SPY 1221, 1222 finally bases, and you have a small stop hunt, and buyers finally show up. Now, this is where this session gets a little complicated for most people. I'm going to then measure this to the upside following the space. Why? Because SPY already finished a full cycle. NASDAQ is a lot stronger. So we're going to measure it from this upper tick. So this is a 272, 2618 rejection. Measure to the upside. Look what happens. So even when JPOW starts speaking, boom, he hasn't even said anything yet in this current moment. Notice how it pumps to that zone. But we have our red zone marked. This is your 8 a.m. print. Your 8 a.m. print in news even holds. So this is showing us again that even when you have major volatility, this is 1 million shares, this is 700,000 shares, the market is still in a fixed range. It is behaved by computers, and it is your job to be able to understand what the computer is and isn't doing to then be able to make the most amount of money from it. Then moving forward, and this is what I find very interesting about this session too, is that it respects our rules very clearly. Even if we're not using this fib set stuff, right? Let's say I'm just leaving your 8 a.m. prints marked, right? So up here, this is the day before. This is why I said remember to leave those prints marked, because sometimes they don't test them at the time, right? Sometimes they leave them in the future. So this is your November 25th session. We started looking at the 28th. But even if I just left this marked, right? There's your one partial, your 8 a.m. zone for that session holds. The session's a launching pad into my personal measurement. It then breaks above, hits our next purple zone and your previous green zones here. We have those marked up here at 403.30. This is from the 25th. And then they continue to support it once they break 403. They tap a dark pool print up here, which, well, this isn't actually real at the time, but they then continue it and pump it. So even on news, the system works, right? And then there's two ways, again, you could have measured this, right? We could either do 1 to 2 to our lows at our low a day, and we could say, all right, SPY made a full cycle, pumps through and continues, or we can take just the 8 a.m. zone. We're ignoring the news, right? 1, 2, 3, take our low of day, and then we notice very clearly within this measurement, notice how it backtests basically something like a full cycle. We can then again remeasure, and we notice moving forward how the session behaves. Now we're going to continue with the Thursday and Friday for the rest of this week, or of that week, and then we're going to talk about the basics of charting and then end the seminar. But Booger, this is another example. So I see a sus print here at 4:01 as soon as the day basically ends. So I'm like, okay, I'm going to keep this marked. This seems important to me. You know, you have your overnight session, da 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 da, small gap down. All right, boom. 8 a.m. Again, we're going to do the same rules over and over and over. Mark this in green, mark this in green, mark this in red, mark this in red, change color coding. And we've already gone over this, but it's better to, like, I just wanted to do a better revamped version of this seminar because a lot of people were missing out how this actually worked. So, again, this is an example of sometimes it happens very quickly. AKA this tick, this is your retrace, your 801, and your 830 if you really want to count it. But, boom, 618. Market's trying to open up strong. Why? We just had a huge move the previous day before, right? We pumped off of the Jerome Powell news. Measure to the upside. 1, 2, 3. A 618 bounce originally here. So we look, 618 struggles. Breaks, gets to your 1272 on news. Breaks forward, gets to your 272. So your halfway point, it's already moved one half of a full cycle. Again, continuing. Your buyers attempt at a higher low. This higher low sucks, so they take it here because it's actually not at your retracement. It's baiting people here. But they get to it. They try a continuation at 10 o'clock. I don't remember what this news was on Thursday at 10, but they basically fail to get continuation. You get a smack candle to the downside. And now sometimes, this is why I'm saying, it's super simple for us. We don't even need to remeasure based on what you have marked on your chart. But this is from your day 4, so I just sent it in the options chat so you can see. And again, this is for the video, but again, in the room, we stated for the 4th, breakout above 408, confirmation over 408.50. We already marked those zones. This would send you into supply at 410. This tick is 410 on the dot. If you want to continue, you need to be above 411.15 and or 413 even. You never break 410. Below, we would have a breakdown below 407.25, which we have marked, with confirmation below 406.85. This would send you into our dark pool print at 405.67, and then our 405 number, which is my 414 continuation. How do we get 405.67 even to begin with? That's that print over here on the left-hand side. So we can do two things. Again, we can take our original 8 a.m. zone and we can measure it to the downside, and or we can remeasure. So again, delete this, remeasure. Well, that's again pretty accurate, right? You have buyers showing up at a 2618. It's a double confluence. It's also a daily fib. That's what I have as that 214. Or we could take your original remeasurement and you can very clearly see it. Buyers support this move this time, right? The previous session was stronger. We have a dark pool print as a confluence. You have half of your former pump holding. So we know this again, measuring this up. This was 1/2 of a full deviation. This is 1/4 of that half holding. So you have a 1618, you have a 405 holding, you have your dark pool print holding, and then we can remeasure to the upside. 1, 2, 3. And notice, again, it's a 1618 bounce. What rejects? 1618. Cool. Follows the rules. Gets to this print. It bounces off a 0.5. We don't really like that as much, but it holds regardless. It's also a dark pool print. Buyers take it. Reject your 8 a.m. zone. Reject your 8 a.m. confirmation before close. And it also rejects basically a full move. So this is the session that then traded flat, and everyone was confused why. And this is what I was saying: half move up, half of your half down, even though it's a big flush, and then one half of your flush being completed as a pump, the full move of your pump being retraced of your half down. Now, this was also going into news on Friday. This was your non-farm payroll. I also wanted to find this, or I found this weird as a little synchronicity. But notice how your buyers failed until the end of the day. They gave you right away the hint that they were doing for non-farm payroll. They were showing before the session even or ended, hey, we don't want this. We don't support it. We don't like it. We want it lower. So, lastly, we're going to talk about Friday's session. And this was the pump that then went green, and everyone was like, what the fuck? How did this happen? Right? It made no sense to anybody for the most part. And I said, holy eyes open levels. Exactly. This changes everything. Um, Now, we're then going to observe this session. And unfortunately, this had your non-farm payroll move. This was a $7 flush immediately. But I want all of us to identify very quickly, look what happened. This is why I was saying your intraday gaps that happen, it's an issue. We need to pay attention to those because we have an intraday gap before your non-farm payroll even starts. So I noticed that, and I said, okay, they're about to play some tricks on us, right? Because they're flushing it really aggressively, but we have two things to identify and to pay attention to. So lastly, we have our Friday session. I'm going to copy this link here so you guys can have that. And we're going to read along also for the video. So display capture this for the video. But with a nasty drop due to non-farm payrolls, bulls are testing our previous supply and demand flip at 401.40 way back, like we discussed on that Monday on the 28th. You basically wanted buyers to hold there. Moving forward, you have your 400 psyche if bears are going to drop it lower. Above us, you have 403, 405, that dark pool print like we discussed. And then 406.60s, 407s are behaving as your intraday bear momentum. But we're just going to observe that from a 400 psyche standpoint. So let me turn that on. Okay. So again, we're going to take our same rules. We're going to do two things. One, we're going to ignore non-farm payrolls. So we're going to take our 8 a.m. print. Bada bam. We're going to mark this. Actually, I'm going to do these zones while I have red. Mark this in red. Red. Basically, these candles are a 4-cent range, so I don't really care. We're going to mark this in green. So green, green. And this is just how I like to color coordinate things. It just keeps it easier. So obviously, again, 8 a.m. doesn't really give us much, unfortunately, with this rule set. Why? Because ignoring non-farm payrolls, there's no retracement here whatsoever. It just moves up. So we can technically remeasure it if we really want to, taking that zone. So let's see what happens. I didn't do this, so this is me experimenting. But yeah, that's pretty clear. Momentum fails. 127 fails. Either way. Measuring this to the downside, we can already very clearly see a full cycle was completed, right? You see your 4618 is already lost, and the session is a lot weaker, right? So I said earlier this session that we have the chance to go green, one because of that gap, two because of the full cycle being completed, but I needed to see more. I did not know whether or not this session was going to go green until certain zones were cleared. Once you cleared above this, aka 406 basically, notice how the punch here is a lot stronger. I discussed a possible pump, but I needed to see how these zones overall behaved. So we're just going to do the same thing, unfortunately, and we're going to measure, or not unfortunately, but we're going to measure this to the upside from that base it makes. Again, follows our rules pretty well, aka 400 Psyche is your low of day. Now we remeasure it, all right? When we do that remeasurement, notice again how we talked about you want a 618 or a 786 to hold when we remeasure things from a former pump. Notice that holds. You then get a continued push and a fight. Now, I then said to you guys, okay, I want to see if 405 breaks. So if you remember, I told chat I went long at open and I took partials at here, here, and here. And everyone was asking me why. And I said, I don't know if this session is strong or not until that then breaks. So we broke it finally. The session was stronger. And I have to remeasure. So 1, 2, 3. So we've had half of, or we had a full cycle down, we had a full cycle up from your dump. Now we need to see if buyers can support this. How do we know if buyers can support this? They can break it over your former punch. You see you 236 break and struggle, finally breaks. You get to your 3-2 supply, fail, or it breaks. Fight, fight, fight. Momentum stops. It pulls back and it makes basically a higher low short term. Now it's also your higher low off of your former, and let me show you guys this, off your former 4236. So that's showing, hey, these bears who were shorting here all day long, they're not supporting it anymore, right? And we can very clearly see that. So we're going to leave this and we're going to remeasure 1, 2, 3. So we see that punch moving forward. And I warned everybody about a possible scam pump into the end of the day. Why did we know this? Well, actually, let me do this. I'm sorry. 1, 2. There you go. I'm sorry. What was the possible scam pump into the end of the day? Well, this was because of the gap. You had your full cycle be completed here. It then made a nice retracement, continued, failed momentum, came back and held a daily node and the former bearish zones for a full cycle back when we were originally measuring things to the downside. Momentum was then reclaimed and you failed continuation up here. So I told everyone the pump has a little bit more room left. And then I warned about us seeing a possible gap down on Monday. We still need to confirm that, which are the futures open? Futures open at 6, right? Am I right? Oh no, I'm wrong. We're gapping up. Cool. Either way, I warned of a possible gap down and I told people to de-risk because I identified that, all right, this is already a full cycle being completed, buyers held, they then pushed it into momentum. So you have the risk of running flat to green to slightly red depending on where buyers then behaved in the ES session. But do you guys have any questions now that we've gone through 5 examples? I hope it helps as well. And also we'll talk about a couple other things first before we end the seminar, but just discussing this. This helps a lot. Yes. Okay, I got you. I need to rewatch videos. I would recommend a YouTuber called Waves618. He can explain things a little bit clearer than I can. Obviously, because I've learned and I've studied Elliott Wave a good bit, but I've also am implying my own rules to it when I discuss things like my 8 a.m. prints, how I'm then identifying those momentum spots, all that kind of stuff. So there's my little twist on it with day trading, but that's basically it. And then I talked as well about the other half of the seminar, which was, this one's not going to be too long, but this is basically discussing pivots and how to properly chart. So I want to keep this more special, right? And more open discussion based. So I want you guys to give me 3 tickers that we can then chart together so we can identify this from a swing perspective, a daily perspective, a bi-weekly and a weekly perspective, so on and so forth. The more liquidity on the ticker, the better. So don't say things like Costco, you know. Um, but provide me with 3 tickers that Baba. Okay, that's a good one. Um, but things like Apple, stuff like that, give me the big name brands if you guys can. AMD, that one works. Coin, we can try that one, but give me like 2 more. You guys can. Nvidia, that's a good one. Tesla. Okay, we're gonna work with this fives. All right. Well, we're gonna start with. I'm gonna avoid Baba, and I'm going to. I'm gonna. The only reason why I'm gonna skip over Baba is because Baba's based on news, but we're gonna start with AMD because it has a little bit more liquidity. It's a little bit easier. So I'm gonna delete this, and I'm gonna do two things. We're gonna start with a clear chart. So when you're looking at something, you want to look at your charts from a weekly to 2 year perspective. I'd say 2 to 5 realistically, but um, 2 years is good enough, basically decade to decade, or whenever you break a range. So we're gonna look at AMD on a weekly time frame. So already, and you're gonna hear mixed information by the way. So I'm gonna do it the way that a someone who works for like a CPA, so like a charting professional would do it. Um, so we're gonna start with your bodies, right? People tell you not to mark wicks. I like wicks for sensitivity, but we're gonna start with something like support. So where can we identify support on a 2 to 5 year basis on this chart? We're gonna start with September because this is a little bit easier. So I'm gonna mark these in green. We're gonna color code it everything. So your pivots are gonna be in green. And why are we discussing this as a pivot? We're basically saying that structure on a multi-week basis is supporting or denying a range, meaning that this is behaving as a multi-week support and resistance to then see how a stock's behavior is overall trading. So these are your supports, short or on a 2 year period starting from September onward. Let me mark this one as well. So, and if you guys have any questions as to why I'm marking these already, please ask. And if you guys understand, it should at least make some sense. But so these are former. We would say this is support from here. All right, boom, 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 boom. They find a supply, so we can identify this in red at that time period. But break it down to support, the pivot holds. So this is a multi-week pivot from July all the way to December being supported. We can identify this up here as well. So this is why we say that charting isn't too complicated. When you're doing stuff like we were obviously discussing before, it is. But even on a day trading and or a weekly perspective, it's important to identify pivots to then see how a stock structure is behaving. So we can identify this. So let's talk about this one. I'm going to mark this one in red. Why are we going to state something like this is a problematic pivot? Meaning that if we're a buyer, we don't want it here really. Um, the first reason why is this is one rejection of a zone. This is all-time high prices as well at the time. But when it punches, breaks through, and these buyers show up again, they would rather take the deal here because this is where your former base is. And let me move it up slightly. Or we could bring it down here because that's where your bullish engulfing is. See how that bullish engulfing takes over this whole structure? So buyers take it there, but we don't want to really take it over unless we get a clear break of your previous bullish engulfing, which is also marked in red. Um, so identifying like a pivot to a pivot to a pivot is important when you're looking at a chart. So again, we take this for example, chops within this range, fails, 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 breaks down. We get to your next pivot point, which is basically here in green. Why are we discussing this zone? Well, we're taking it from this. You can see this is our last bullish engulfing, and then you get to your upper node, which is right here. So buyers stall, the base goes a little lower, still holds, breaks above, and then you stall at your next bullish engulfing. So any large candles with a lot of volume, it's important to identify, right? So a lot of volume on these ticks. Very helpful, thank you. Of course. But it's important to identify these zones with volume and volume behavior. So like I missed this one, but this would be another one. Uh, so we can see in this example, right? Again, buyers try this base here and here, but we already know that there's not a lot there. So it rejects again your bullish engulfing structure. Finally gets down to its actual volume shelf, and now buyers are actually trying to step in for the first time ever. Realistically, you have a consistent amount, right? It's not fluctuative and they're not selling as aggressively um, because they have a better deal basically. I'm going to delete all these, but we're going to do the same thing. We're going to do it on, we're going to move on and we're going to do Coinbase. So Coinbase, again, we're going to identify multi-week structure and a pivot. So where, let's do it like this. So we know one, you had major structure, finally base up here, way back. All right. Then you have your next engulfing. Why are we marking this? Well, it's because of this tick. It breaks over. We're going to mark the top of that engulfing. It's where the buyers break over, eventually rolls over. And now we can see, looking at this, right? Why does this turn into a weekly doji? Well, it's because they struggle at 340s. Um, then we break down, blah, blah, blah. Finally forms a new base. We can do the same thing again. So this is your bearish engulfing, right? We're going to mark 192s. Rejects. Buyers never get a weekly candle close with a positive structure. Crypto market tanks. Now you're behaving within this or these bearish engulfings, right? Because we're going to identify it with volume. So look where your volume picks up in this node. So we know that this node, this node, this node, and this node are your upper importance, meaning that sellers are stuck, or not stuck because they're green, but your sellers are currently positioned in 130. So this is your positive node if it wants to continue running. This is your multi-week resistance. So if it wants to run, you get a break of 115s. This is your confirmation tick. This is your weekly demand. This is your lower tick if you want to mark it. So breakdown, holds, breaks over. This is your bearish engulfing again. See how it stalls here, basically where the black line is. Breaks over, again stalls, rolls back over. Buyers don't want to take it again, so it goes lower. So like looking at this, right, we can say Coinbase is nearing a base, but it's still a short, and so is the crypto market. Why? There's no buyers in Coinbase, so there's probably no buyers in crypto. They don't support it. It may have a multi-week, aka 1 to 3 week run up, as we've seen. 1, 2, 3 breaks down, 1, 2, 3 breaks up, then stalls, breaks out, breaks over. Um, so right now it's a short. We're gonna do Nvidia again, same thing. So you can start from that 2018 base if you want. Um, I'm just gonna zoom in realistically, and we're gonna talk about 2020 on. So you have your COVID base in green. You then had your bearish engulfing break. Okay, there's no price over there. Just make sure. So this is your then break here at 92. 92 behaves as supply. Demand would be slightly below at 88.80. That holds in a weekly candle, or 2 week technically reverses. Major bullish engulfing. 103.70. 97. Buyers obviously hold it, break it above. Same thing again. Large doji candle. Fight for 131s. Doesn't ever lose its multi-week engulfing here at 112. Why do we know this area is important? Well, again, marking this right, this is where you get your continuation stall. You never revisit this price. So buyers showed up here again. Obviously, it's also on the body. Algorithms support it, body to body, breaks up. Um, Another bullish engulfing over here. So 144.45. Mark that. Break over. Back tests. It supports these buyers. It holds this doji right here. Breaks over. This would be your supply. So Nvidia is currently testing a short-term supply breakout. Where is it likely to go? Well, we can assume either 175.60 to 180s. Why? This is your multi-week structure. Then again, doing the same thing. Marking 205s. Why are we marking 205s? It's your weekly engulfing up here. So these zones hold. This holds, breaks out new all-time highs, backtests, fails this engulfing up here. Right, so let me mark it here. So when it breaks out, right, notice how it, and even then we don't need to go that high. Notice how you don't get a weekly candle above this at all. So when this weekly closes, it closes at 276, so it closes higher, and then this one closes at 267, so it basically closed bearish. Next week is an engulfing down. So having those zones are important, or at least understanding what your trade idea can possibly can be. And this is how you would get things like swing pivots and stuff like that. I can do a couple of examples if you need help, but it's basically just taking your volume and then identifying weekly ranges of breakouts, how by dojis and engulfings, so where buyers struggle or where buyers are supported or rejected, marking those areas. So yeah. Any other questions overall that I can answer that aren't related to the seminar? So you chart levels based on the candle. I do it based on the if I'm doing a weekly pivot measurement, like if I'm measuring things on a multi-week basis, I'm marking the bodies of major bearish and bullish engulfings and red or green dojis um, with volume. I don't want to just mark like a no volume candle. It doesn't matter to me. Unless it's just rejecting a price, then it's important. And again, this is recorded for anyone who missed the first half. Any other questions? We can talk about anything. Greeks, IV, um, whatever you guys need. I got about 15 minutes to kill. 10 minutes. I'm gonna end the recording here though.